Like John, I also found that deposit number, one of the most interesting from the report. Total deposits grew by 86% in the quarter. How much of that is because you are paying a 2.5% APY on savings account? I check my Chase every day and it's paying 0.01. That is a huge gap. The big banks largely have not budged. Are you taking some of those customers? Are they switching over to you?
SoFi just released its Q3 earnings on November 1st, and everyone is speechless. SoFi recorded its 6th consecutive quarter of adjusted net revenue amounting to $419 million. Galileo signed 10 new clients, and SoFi Bank's perks are slowly but surely starting to get the recognition it deserves. SoFi focuses on providing its members the lifetime value they deserve, and because of this, they get more revenue, and with more revenue comes a better time for all of us SoFi investors. In this video, we'll talk about 8 things you might have missed in the last earnings call, SoFi's current short interest, and an update on 5 institutions betting heavy against SoFi. We're not financial advisors, and this is not financial advice, so always do your own due diligence. Starting off with SoFi's short interest. You know SoFi is winning when the shorts slowly start to abandon their positions. With about 96.7 million shares shorted, the shorts are retreating as the short percentage decreased from 20.7% 4 months ago to 13.6% of the float this October 15th. Last quarter, SoFi reported 12 cents of earnings per share. That's a beat of the consensus estimate of 12 cents. Although SoFi gained a negative net margin of 27.19% and a negative ROE of 7.30%, SoFi was still able to surpass the analyst expectations on revenue of $346.39 million and achieved $362.53 million in revenue for the quarter. According to ETF Daily News, analysts are now expecting earnings of 10 cents per share for this quarter. And here's what we could say.
Surprise me.
If you weren't able to listen to the hour-long earnings call, here are 8 things you should know about SoFi. Number 1, SoFi just hit its 6th consecutive quarter of record revenue. Up by 51% year over year, SoFi gathered an adjusted net revenue of $419 million, proving unstoppable growth in all of SoFi's 3 business segments. On top of that, adjusted EBITDA is not just up by half, but a whopping 118% quarter over quarter. And SoFi is seeing visible growth in members, product additions, and cross-buy volume. Members are up by 61% compared to last year, and products are up by 69%.
69.
And if you compare adjusted EBITDA this third quarter, SoFi is up by a whopping 332% growth. SoFi is looking good as they achieve another positive GAAP net revenue for SoFi Bank at $28 million at an 11% margin. Number 2, lack of demand in student loans, not a problem. People might have underestimated SoFi's personal loan segment. With the student loan repayment put on hold for almost 3 years and home loans facing setbacks from a rising rate environment, SoFi's personal loans are here to save the day as SoFi originated $2.8 billion of personal loans this quarter. And that's nearly 2 times as much as last year's $1.6 billion. But let's talk about the secret sauce for SoFi's growing lending segment. Number 3, where does your money go as a SoFi shareholder? This is where the perks of being a bank comes in. SoFi Bank gives us the feature of having a solid balance sheet, and with SoFi's strategy of diversifying its fund sources while driving efficiency and cost savings, SoFi benefits significantly by getting more net interest margin revenue per loan. SoFi's long-term play of becoming a bank is finally paying off since they won't need third-party firms to fund their loans. SoFi gets to enjoy more profit from a lower cost of funding loans. Number 4, more lending revenue. Get the best APY in the industry for your savings account. How do you think SoFi is offering you an industry-leading annual percentage yield, a 2.5% APY? With greater revenue and profit from its loan segment, SoFi reinvests that gain to offer the best interest rate in SoFi checking and savings. And as you heard earlier, how much APY is Chase offering?
It's practically nothing.
If you ask us, that's a surefire way to make the least amount of money possible. But back to SoFi. In Q3 alone, SoFi gathered over $5 billion in total deposits, and 85% of SoFi money deposits are coming from direct deposit members. And now, it's easy to get them to cross-buy another SoFi product in the coming days. Now that's what you call a strategy. Number 5, SoFi's new products. So the 2.5% APY is now old news. SoFi will now offer offer 3% APY to the SoFi checking and savings members.
Hey, Anthony, good morning. It's Deirdre. Like John, I also found that deposit number, one of the most interesting from the report. Total deposits grew by 86% in the quarter. How much of that is because you are paying a 2.5% APY on savings account? I check my Chase every day and it's paying 0.01. That is a huge gap. The big banks largely have not budged. Are you taking some of those customers? Are they switching over to you?
We are absolutely winning market share in checking and savings. It's the complete value proposition. We make it quite easy to do checking and savings on your phone. You can sign up in minutes. Within the app, you can pay via your phone, you can pay via debit card, you can do person-to-person payments. We give you reward points for paying bills, which you also can do via the phone. So it has all the features and functionality that you'd want in a digital solution versus a physical solution. And on top of that, we're giving a really high interest rate of 2.5% on checking and 3% on savings and no fees.
Yeah.
So 85% of our deposits are coming from direct deposit customers, and their median FICO score is quite high at 750.
SoFi Invest also introduced new proprietary ETFs, and members can expect options trading by year end, while SoFi also launched credit alerts that will drive greater engagement from its members. Number 6, the real status of the AWS of Fintechs. In Q3, SoFi was able to record full tech segment revenue of $85 million, a 69% gain from last year. SoFi's Galileo seems to be working as they are seeing growth in new verticals, products, and geographies. Just in Q3, Galileo added 10 more clients, 30% coming from deals in B2B and 40% coming from outside the US. SoFi is not just for customers, as they are now expanding their services to businesses, at least on SoFi's tech side. Number 7, SoFi is getting quality members for cheaper. As Commander Noto said, we achieved this top line growth while maintaining our stringent credit standards and disciplined focus on quality. SoFi's personal loan borrowers have a weighted average income of $160,000 and a weighted average FICO score of 746. Sales and marketing as a percentage of revenue have also decreased compared to last year, and SoFi has a clear goal in mind. They're looking for members to whom they could offer their promised lifetime value. Number 8, the aftermath of being a licensed bank. Now, the upside of being a bank, aka lower cost of funding, from more flexibility and sufficient excess liquidity. With $7.1 billion of warehouse capacity for SoFi, only 35% is drawn, which means SoFi has the power to hold loans on the balance sheet for a longer period. SoFi can earn from this growth in the balance sheet with net interest income when they either originate or repurchase loans. Although SoFi does seem to be crushing it every quarter, there are still some doubters. Here are 5 big investors / banks betting against SoFi, according to Investor Place. Goldman Sachs has put options against 6.52 million shares, while Citadel Advisors has put options against 4.27 million shares. Here you can see the list. SoFi has a crystal clear vision on becoming the best one-stop shop for anyone's financial needs. How will they do that and get SoFi investors more returns in the next 5 or 10 years?
We're going to reinvest 70% of incremental revenue in the business and drop 30% of the incremental revenue to the bottom line to show progress towards our long-term margin of 30+% on an EBITDA basis. And so the growth that we have this year is one that we want to compound for decades, not for just 1 year, and have it be consistent over time. So we will continue to reinvest in the business with that ratio. And we think we're at such early days in all of our products. The only thing that's
a special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all the support. We'll do our absolute best to provide the most value possible. Shout out to Arthur Magazu, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Denzel, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufrand, Jay Bone, and Alan. We really appreciate all the support. Thanks for watching. We greatly appreciate it. And until next time, peace.